Pradip P Shah, Chairman IndAsia Fund Advisors, joins us right now on the show. Pradip, hi, morning. What explains this movement in the markets of late? Is it the fact that perhaps the Indian markets had got too richly valued or overbought, or do you think this is just mere profit taking and would stop, in the next 2-3 trading sessions?
Well, I think there is profit taking. I think there is recognition that the exuberance was misplaced, that there is no overnight magical reset switch that can put the economy on the path of the growth and the fiscal consolidation and controlling inflation that the finance minister just talked about on your show. So I think that recognition has come. But given that, I think as we go forward, the discerning investors will start buying those stocks that look fairly valued or undervalued, and you will see sustained buying, sustained inflows of money from overseas as well as from domestic investors as the government starts showing its cards.
When you were expressing your thoughts on the market valuations and what is happening with cyclicals, why don't you carry on with your thoughts?
Yes, so some of the cyclicals are of course over leveraged and so on, and those could be best sold as it were at this time when the rally has been decent. But again, we find that some of the stocks, the IT, the pharma, which have very robust business models, both export as well as domestic markets in some cases, they have been beaten out perhaps much too much, and so again there will be buying opportunities in those stocks as well as in consumer products. There was a noticeable shift from these pharma and IT and consumer to the cyclicals and so on. So I think there'll be balance in terms of understanding that overnight these cyclicals can't just jump up as much as they have and ought not to, and that there's fair valuation in some of the other scripts, and there'll be under-researched stocks that will emerge and be then the focus of many of the discerning buyers.
For the longest time, you've been of the view, Pradip, that one should stick to quality, stick to pharma, buy into IT. Has that regime changed? Is it time now to sell out of IT pharma, or one should not sell out of IT pharma, but one should buy more?
No. The business models are very robust. Indian pharma companies, IT companies are doing extremely well in the international market, in the domestic market. The spend on pharma is going to continue to increase in India. We did have last year the price control in Indian pharma industry that hurt some of the companies, but basically India needs more medicines at, of course, affordable price, and the market is very large. And the export markets are very good for Indian companies. We are very competitive. We have the best of chemical synthesizers as well as the process engineers and the marketing guys to sell our products at an affordable price to the Western markets, and therefore the business models are robust. I would say that a correction would be a good time to look at individual scripts and pick those which are fairly valued.
So Pradip, what's the sense that you're getting? Do you think it's the broader end of the market which would continue to outperform post this phase of profit taking that we are seeing, or do you think the concentration is going to be towards quality names and the blue chip nifty names?
Well, there will be concentration on blue chip and nifty names even when as the government unfolds its policy measures, but under-researched stocks which will do well with decent management, those will then get picked up and be the target. And a lot will depend on what the government announces. Now, you have to give this government a little bit of time. The first budget will be the big policy tool that will be the indicator of what the government intends to do. And there'll be some short-term and some long-term items. Now, in the short term, for instance, if Mr. Jaitley were to reduce excise duties by 4% across the board, Mr. Chidambaram in his interim budget reduced them by 4% on a certain number of items and only till June 30th. But if that was extend across the board, we will see a fillip to demand and in fact address inflation. Simultaneously, if government addresses supply side factors on inflation, I know some of these things require legislative amendments such as the Essential Commodities Act and so on, but at least start selling food from piles from the Food Corporation and so on, so that you address inflation. You also control the fiscal deficit by accelerating the reduction of diesel subsidy and giving a roadmap for reduction of fertilizer subsidy, then talk to RBI that look, this is what we are doing to reduce fiscal deficit, this is what we are doing to reduce supply side to constraints and therefore bring down inflation, then request RBI to bring down interest rates. That will give a fillip to capital goods cycle and capital goods investments to take place, because at 13% pre-tax returns on tax-free bonds today, people are not interested in taking risks and investing, as it were. So you have to bring down interest rates, but simultaneously with controlling inflation by taking measures to address inflation. And I think the government is seized of it, but it will take a month and a half to show. So within this month and a half, there will be some pessimism, some mood swings that will come, and that will be time to pick up the good stocks.